Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Hello, Dumalang, and welcome to our very first Plug and Play Global Sustainability Showcase of 2022. My name is Bakang Moedza, and I'm the Corporate Partnerships Manager in our Johannesburg, South Africa hub, and I get the amazing privilege of being your MC for the day. We have an incredibly exciting agenda for you today, but just before we go into that, a little bit of housekeeping. So unfortunately, we won't have a live Q&A session, but please feel free to engage in the chat. However, polls will be launched after each one of our startup presentations to facilitate an introduction for you and the startup after the event. So today's event is going to be packed with different panel discussions, tackling lots of topics in sustainability. You'll get to meet some of our corporate partners and hear what some of our batch and alumni startups have been up to over the past few months. But because I don't want to give too much away, I'm going to hand it right over to our Global Sustainability Director, Matt Claxton, for some opening remarks. Over to you, Matt.
Everyone, my name is Matthew Claxton. I'm the Global Director of Sustainability at Plug and Play, and welcome to the Sustainable Action Global Showcase. We're very excited to have you here today, as we'll be featuring some exciting new startups. You'll hear from some of our existing ones that have new partnerships that have been formed, and you'll hear about some more announcements as it pertains to partners, investments, and new locations. Now, before we jump into today's event, I just want to give you a quick background about Plug and Play for those of you who are new to our platform, and then go into a little bit of a history of the sustainability program here at Plug and Play. So our journey really starts here with our CEO, Saeed Amidi, and his lucky building. And the reason it's called the lucky building is because he was renting office space to interesting startups on the top floor while he was running his Persian rug store on the bottom floor. And some of those early startups that come through his doors were ones like PayPal, Google, Logitech, and Dropbox. And not only did he rent office space to them, but he was also one of their early investors. He saw Google grow from 13 people to 30. He worked with PayPal when there were just 2 people, and he was one of the first investors in Dropbox. And it's easy to say it worked out incredibly well for him. And fast forward to today, about 15 years ago, Plug and Play officially was formed. And we originally just worked out of our Silicon Valley office, which was our global headquarters, and we've expanded pretty rapidly over the last 15 years. So today we run over 60 accelerator programs all around the world across 18 different industry sectors. We work with over 500 of the leading corporations to help them with their different innovation journeys. And we invest in over 200 startups every single year around the world. And not only that, but we've been growing very quickly. So we now have 42 offices around the world with a few more new locations that will be opening up. We have over 600 people on staff, and we have over 200 ventures people that are actively sourcing and scouting startups from all around the world and across all the different industry sectors that you see at the bottom of the screen here. And these are new startups that range from all the way from pre-seed all the way to pre-IPO. And if you're interested in learning more about those startups, please make sure to reach out to either myself or a member of our team. And lastly, we've had a really great track record when it comes to investments. So last year, we welcomed 15 new unicorns into our portfolio. And this year already, we've welcomed 4 new ones. That's bringing our total now to 34 unicorns in our history of Plug and Play. And so when it comes to sustainability, our journey really starts here. Back in October 2019, we officially launched a sustainability program with the Alliance to End Plastic Waste. And though, for those of you who are not familiar with them, the Alliance on Plastic Waste is a global consortium of about 65 companies from all around the world and all across the plastics value chain that have come together with the mission of ending plastic waste in the environment. Plug and Play's role is we've been running their global accelerator program for them over the last 2.5 years. So what we've been doing is we actively source and scout thousands and thousands of startups every single month and bring them into our ecosystem. To date, we actually have over 64,000 startups in our ecosystem, and we're bringing in an additional 15 to 1,600 every single month. And we look at all these early to late stage startups and figure out which ones are the best ones for these accelerator programs. And so here's how the one with the Alliance on Plastic Waste one worked. We'll look at startups that range from waste collection, sorting, processing, and end use markets for plastic waste material. We look at design of plastic to make it easier to recycle, financial incentives for bringing plastic material back, and river pollution prevention and waste material exchange. And for those of you who are not familiar with the waste material exchange one, that's more of a marketplace between waste collectors and the people who want to purchase that waste material and use it for something of value good. We also do a call for applications and sort through all the interesting startups that want to apply to be part of this program, and then shortlist it to a top 50, and then pass it along to our panel members on paper. The top 20 then move on to what we call a selection day, and they participate in a 5-minute pitch where they're able to present to all these panel members here, and then ultimately gets down selected into the top 10 or 12 startups that go into our 3-month accelerator program. Now, we've had fantastic success with the program so far. Out of the thousands of startups that we reviewed, 103 have so far been accelerated, and that has led to at least 140 commercial pilots and POCs, and at least $85 million in capital currently deployed into those startups. And keep an eye out for our newsletter, because you'll be hearing more and more exciting announcements about those startups and more capital being deployed into those incredible companies on their mission of ending plastic waste all around the world. Now, these are just a handful of those public pilots and partnerships that have been formed, also some of the notable investments. And you'll be hearing from a handful of these startups today as they give you an update about their work since the last time that they presented in one of our public events. Now, we haven't just been doing work in plastics. We've been pretty busy. And since our launch of sustainability, we've also launched new initiatives in carbon neutrality, sustainable fashion, and clean resources. With each one of these programs, we have industry corporations underneath that are actively working with those exciting startups and helping us run these accelerator programs. And not only have we been running new programs, but we've also been setting up new locations all around the world. So in early 2020, we just started with our Silicon Valley program and then set up a new location in Paris and Singapore. Then in 2021, we expanded and we launched new programs in Shanghai, Sao Paulo, and Johannesburg. And in 2022 already, we've launched a new initiative in Alberta, Canada with the Alberta government. And we're about to launch our new one in Tokyo. And you'll be hearing a little bit about that later in this event. And not only that, but we've been bringing on more and more exciting partners onto our ecosystem. So in addition to the partners we currently have, we're excited to announce and proud to announce our new work with the Alberta government, Westrock, Sin Darby Plantations, Capitland, and 5 other energy, fashion, and chemical companies that will be announced in a little bit. On top of all that great work, we've also been heavily investing in the different spaces that we work in. So Plug and Play Sustainability has done about 24 investments in the last 2 years with some truly incredible companies that are helping make our world a much better place and a much cleaner place. And we can't wait for you to hear from those incredible companies who will later today or in our future events. And with that, I'll turn it over to our MC of today's event, Bakan from our Johannesburg office. And again, if any of you have any questions or would like to get involved in our sustainability program, please make sure to reach out to either myself or a member of our team, and we're more than happy to figure out a way to get you involved and engaged. Thank you so much.
Thank you so much, Matt, for sharing that. And that was a perfect transition to our next speaker, who is our CEO, Saeed Amidi. Over to you, Saeed.
It is great pleasure to come to you again from our head office in Silicon Valley. We launched our sustainability vertical a little bit over 2 years ago. And then very soon, Alliance to End Plastic Waste collaborated with us, and we launched many platforms around the world, starting with Silicon Valley, then Paris, then Singapore, then Shanghai, then Sao Paulo, Brazil, and then finally Johannesburg. It is with great pleasure to tell you we are excited to launch with Alliance to End Plastic the Japan platform in the next 30 days. And all of these hubs have worked together with all of our corporate partners, may it be in packaging and material, but many other industries. I know that our travel and hospitality division is working with the Airbus, it's working with many of the airlines and many at the airport, because this carbon reduction and being more sustainable is not anymore good to have. We must have it. The consumer expects it from us. And I believe every corporations, including insurance, banking, any industrial activity, one of their top of their agenda is their carbon reduction and how they can be more sustainable. We, also with great pleasure to say that we launched our clean resources vertical in Calgary, Alberta. So we also are going to go and connect whatever we've been doing around the world with the province of Alberta. And we are planning to at least have 20 startups join us, which we will have from early to mid stage to late stage. And we look forward to helping them build global companies. Again, it would not be fair for me not to mention 2021 as far as our investments and our portfolio is concerned, was the best year in history of Plug and Play. We had 15 new unicorns that we are so proud of, those entrepreneurs like Big ID, Block Damien, Sheepo, etc. And the interesting thing about this unicorns is that majority of the startups, we were with the entrepreneur when they were 2 people and they were crystallizing their idea. And then finally, in January 2022, again, I think it is, we are very proud because we had 4 new unicorns in January. It is really fun to share these with you. Whoever would like to learn more about these startups, and we could share with you our scorecard for 2021. And we are very close to having a unicorn in our sustainability practice. I don't want to spoil the surprise for you. Again, it is great to be here with you. It is great to focus on this different initiative of our sustainability practice. And Matt and the team will share with you a lot more details. If you're not already part of our sustainability practice, I invite you to join us, and let's do this together, make a better world for everybody who is going to come after us. Thank you so much.
Thank you, Saeed, for that insightful message around our expansion ambitions and some of the things that we've been up to. So now, please help me welcome our first panelist on a panel talking about investing in sustainability startups. We're going to be joined by Joseph, Managing Director of Closed Loop Partners, Emily Fritz, Principal at Wesley Group, and Luke Henning, who's the Chief Business Officer at CERC for this first panel. Take it away, guys.
Hello, everyone. I'm very excited to welcome you to this great panel where we're going to talk about investing in sustainability. So with us, we actually have two investors and then a CFO from an exciting startup. So I'm first going to kick it off to our panel members where they're going to introduce themselves, their companies, and some of the exciting areas that they work in. So first, I'll pass over to Emily, the principal at Wesley Group.
Hi, everyone. Great to be here today. I'm an investor at the Wesley Group, a venture fund in Menlo Park. We've been investing since 2007 in the sustainability and digitization of energy, mobility, industrial technology, buildings, and a little bit in cybersecurity. We're typically investing in Series A and B companies, writing checks of anywhere from $5 to $15 million. And some of our notable portfolio companies are, we were early investors in Tesla, in SentinelOne, Planet, Procore, and a number of others. I am personally excited about the revolutions happening in all of these industries, especially around sustainability and decarbonization. And two areas that our firm has really taken a close look at and continues to be interested in investing would be the next generation of electrification of vehicles beyond passenger vehicles, looking at medium, heavy duty, boats, maritime, and the value chain and services around the next generation of electrification. We're also really interested in a theme would be the increasing demand for battery metals and commodities to fuel electrification. So we've invested in a company that's Plug and Play also is working with, called Circular, that's doing supply chain traceability for battery metals like cobalt, nickel, copper, and lithium. And there's so many more that I'm sure we'll talk about today.
Great, thank you. Thank you for the plug also for us. Danielle?
Hi, everyone. Danielle Joseph, really happy to be here. I'm a managing director here at Closed Loop Partners. We're an investment firm and advisory services business entirely focused on accelerating the transition to a more circular economy. So thinking about sustainability from the perspective of everything from extracting materials out of the ground, utilizing them in whatever type of manufacturing or production process, and then often disposing of those materials in landfill and flipping that narrative on its head to recapture all of those materials back into supply chains. I think we'll have a lot to talk about today, I'm sure, on that topic. But Closed Loop Ventures within the asset management division has a venture capital fund. We're launching a growth equity strategy. We have a private equity fund and also a catalytic funds group, all of which are designed to provide whatever the necessary type of capital is that's the right fit for the businesses in the circular economy space that we're trying to accelerate. By way of background, I have actually been a growth equity and an infrastructure investor and a venture investor in the environmental space for about the last decade, and currently run the ventures group here at Closed Loop Partners. We also have an advisory services business where we work with some of the world's largest corporate partners, many of whom also Plug and Play works with, to help accelerate this transition even further, helping to pilot some of the early stage companies in large retail stores or with some of our within the supply chains of some of those partners. I think that's it. I know we're going to get into some examples later on, so I'll pause there.
Perfect. Thank you so much. And lastly, to our startup, Luke from CERC.
Thanks a lot, Matt. It's great to be here. So I'm Luke Henning. I'm the Chief Business Officer now, formerly the CFO for CERC. And at CERC, what we're doing is we recycle polyester cotton blends back into their raw materials so they can be made into fresh fabric. So basically taking the linear supply chain for fashion and making it circular by taking that waste that's going to landfill or incineration and turning it back into fiber for textiles.
Great. So all of us have actually been working in the sustainability space for about a decade now, not to date any of us. So I want to kind of start with, how have you all seen the space change over the last 10, 5, 2 years, and what is it like today? Maybe Danielle, we'll turn that over to you first.
Yeah, maybe taking your last prompt first. Even just in the last few years, I joined Closed Loop in 2017 when circular economy was not really a word in most people's vocabularies. And fast forward, I mean, I guess now it's nearly 5 years, but it seems like the transition happened very, very quickly, probably within 2 or 3 years of me joining Closed Loop. Circular economy has become a buzzword that I think corporations know, consumers know, investors know, and it's been phenomenal to see the growth of that, again, just in the last few years. And one of the things, actually, having lived through the clean energy transition, which of course we're still working our way through, electrifying and using clean energy sources for the grid, that adoption curve was much, much slower. And the way that I look at it, I think there are a few things, one, that are attributable to that change in adoption speed, one of which is that a lot of materials that we handle are tangible, they're tactile, consumers are touching them all the time. And so actually that pull from consumers has pushed the industry forward in a way that I couldn't have even anticipated. I think there's, of course, still so much to be done on the B2B side. That's where actually a lot of our, especially early stage investments fall. But I think the storytelling around consumers and bringing them into that circular economy or sustainability narrative is actually incredibly important for moving these markets forward.
Yeah, and so I'd like to turn that over to Emily, but add a little bit of a additional part to that. So Emily, you come also from the public sector, then entered the private sector. So same question to you, but how have you seen the change in the public sector, especially as someone that comes from an administration that was very forward thinking and putting a lot of money and capital into the sustainability space?
Yeah, so I'd say to first address the private sector side, our firm's been investing since 2007 in sustainability and clean tech. I think one of the first funds that focused on this area back during Clean Tech 1.0, as it's referred to. And I think one thing that's exciting that we're seeing now is, in addition to, especially decarbonization of the power sector and the transportation sector, the cost curve has come down so dramatically that the inflection point for deploying a lot of these technologies really makes more sense than it did a decade ago. And also, as a result of that, and increasing all of the reasons Danielle just said, we've seen so much new private capital coming into sustainability and decarbonization, whereas 10 years ago, there were some funds, and there were quite a few funds that invested at the time, but there was not the amount of growth stage capital needed to, especially for more capital intense companies, get them through the different stages of deployment, demonstration, and commercialization. And I think that's a real shift that is necessary to see progress, and also really exciting. On the public sector side, I'd say, and on the private sector side, I'd say there's still, of course, in the Biden administration, huge commitments coming forth, to decarbonize all sectors. And we saw that back in 2008 with the Obama administration's Recovery Act, where trillions of dollars was pumped into especially decarbonizing the power sector. And I think one interesting shift is, in addition to renewed commitment and a global coalition around climate change that is much more, still difficult to get consensus around, but much more overall committed than we were 10 years ago. The shift on the technology deployment side and funding side and incentive side has moved from deploying solar and wind to decarbonizing industries that are really hard to decarbonize. So a focus on the industrial sector, decarbonizing chemicals, materials, and industrials, which is, I think, an interesting shift. And so we started to see that narrative shift a little bit, towards that next step of decarbonization that is necessary and also very difficult. But all in all, and I think I echo Danielle in saying this, I think the tailwinds are, behind sustainability and decarbonization are really exciting. There is so much work to do, but we are definitely in a better place than we were 10 years ago.
Yes, I completely agree with that. And so I wanted to touch on some interesting points and then turn it over to Luke. So we talked about there's been this real shift. We're working on more and more difficult solutions now. Danielle, you talked about getting things back into the circular economy, and it all has to deal with materials and looking at plastic waste or textile waste. And so, Luke, your company is actually working on technology that wasn't really around 5-7 years ago to invest in. So would love to hear a little bit more about what you guys are working on and how has the journey been for you to raise capital, through the life of your company.
Thanks, Matt. So we actually started in the green chemical space before transitioning into textiles. And so, when you talk about going through some of these cyclical markets, when oil collapsed, this was back 2014 or so, you had a lot of shifts away from anything that was looking to replace petroleum-based products. We made the shift into textiles about 4 years ago, and partially because once we discovered our process was suitable for recycling textiles, we tested, was this something of interest? And it was just starting to become something of interest. We got a lot of industry interest, but none of the funds or traditional investors were there yet, by and large. Most of them, textiles or fashion was not yet understood to be quite as polluting an industry as we now know to be today. It just wasn't out there in the general understanding. And also a lot of funds just hadn't started to incorporate this into their thesis. The other thing is we talk about the circular economy now, and it's something that's much more familiar as a term, but 4 years ago, that was very, very new. And so we've definitely seen a shift. Like 4 years ago, probably the biggest deal being done in circular textiles was probably sub 2 million, to where it is now, where you're seeing people IPOing around this. So a very dramatic shift. And to touch on a point that Emily made, this increase in the amount of capital that's available. Since we did our Series A and closed that at the end of 2019, I think there's been, a more, I think it's a more than 30-fold increase in the number of funds out there in the public market that are now saying they focus on sustainability, specifically as one of their core tenets. So it's a huge shift. And it's one which we thought would slow down, when COVID hit, we were like, when budgets get slashed, is sustainability going to come off the table? And no, actually, if anything, the interest increased through that period.
Yeah, I think actually maybe building on that, on Luke's comments there, and Emily's comments, there is a lot more capital in the sustainable investing landscape today. It's also not necessarily the same actors that were around 10 years ago. To Luke's point, there's actually a number of new funds that have been raised. There's also a tremendous amount of corporate dollars that are now being invested, and unique catalytic vehicles that have different return targets, different return horizons that are really designed to help these companies that are maybe more asset intensive, more linked to infrastructure, longer lead times on commercialization, help them scale. And I think that's a huge fundamental shift. We're no longer relying on the traditional venture capital market from 10 years ago, although we are now seeing more and more of those players enter into the space as they see the opportunities, which is, I think, a huge win for the industry overall, and something that, when I got into the space 10 years ago was the dream, right? That we would demonstrate how both financially attractive the sector was and how impactful it was, and would draw the more traditional pools of capital into the space. I think we're just starting to see that transition now happen, which again, very exciting, but I think also not to discount how new the capital is in the space.
Yeah, and just to reiterate that point, I think the one huge and positive shift, in addition to just increased capital overall, is what Danielle referred to, which is different types of capital with different return profiles. For example, a number of really exciting new funds focused on debt and project finance for more project and infrastructure heavy companies, where which is obviously a huge part of what we need to drive sustainability and decarbonization, where venture capital is not always the best fit for those types of companies in every instance. And so that has been a real change in thinking, and also a change in the types of capital that's being raised and deployed, and now starting to see traditional financial institutions start or double down on investing with similar types of vehicles, which I think we'll continue to need more of, and hopefully see more of.
Yeah, so there's been a lot of changes in the last really year and a half. One, Luke kind of touched about on this. We didn't see sustainability come off the books for a lot of corporations and VCs. It seemed very disconnected from what was happening in the public sector, or really with the market. Everything was still going and even increasing. We're seeing a lot of new players coming into the space, whether they be startups or VCs or other types of funding instruments. So my question to the investors, and then Luke, I'll turn to you with a different type of question. How can the newer people coming into the space kind of sift through all the hype and noise that's out there? Because there is a lot. We're hearing about announcements all the time. So would love to hear, what are your guys' advice when it comes to sifting through all the noise to see what is real and versus what is, kind of just fluff?
Sorry, as an investor or as an entrepreneur?
Why not both? Either one.
I can take a first stab at it, but I think the answer is probably ever evolving and changing as the markets continue to evolve and change. I think one counterpoint to the positive angle that I raised and that Emily built on around the amount of capital built coming into this space is the flip of that, is that there's a lot of overinflation and multiples and prices being paid for investment into those companies. And so I think one thing to watch out for as a founder and as an investor is recognizing that we are maybe in a hype cycle. Might be too soon to tell, right? But we might be in a hype cycle. I think for a lot of reasons, I hope that we're not. And so in an upside scenario, everything continues to go well. There's more capital that's funded into these companies. Everyone continues to succeed, and there's a win for the environment and everyone who's a part of this movement. The flip side of that is that if and when those the capital that's currently flowing into the space falls away for a variety of reasons. About 10 years ago, it was a large blow up of a company called Solyndra that scared all of the capital in the solar world effectively away from investing in clean energy. And that can happen, almost overnight. If that happens, then you have a lot of companies that end up struggling to raise money. And so I think just as you're growing these businesses, being really smart about how you're building out the plan, maybe not necessarily relying exclusively on, the next $200 million raise in order to reach that next milestone. So I don't know that that's a full answer to your question, but I think that's the thing that I think about a lot in this space today.
Yeah, and just to add on to that, I think from an investor standpoint, and we've tried to be careful about this, it's really, really sifting through the noise to analyze companies on their merit, on their technology, on their team, but also on the inflection point in the market, right? And in what your return profile is, and when you think that in that particular sector, it's the right time to make an investment, and the right time to invest in an idea. And also, kind of staying true to principles around investing and valuations, and valuing companies on their traction, and sometimes passing or saying no if it doesn't make sense, right? I will say though that what we're seeing in the market on the private financing side is not just sustainability and decarbonization. It's in climate tech. It's happening across the board. So I think that if there's a contraction, it will happen beyond just sustainability and climate tech. On the entrepreneur side, I think to that point, we always advise entrepreneurs to be really thoughtful about how much you raise and how much you actually need. Venture capital firms, especially, who are raising a lot of money and are incentivized to keep raising funds, they will sometimes push you to raise more than you want. And while certainly raising capital to de-risk the company, especially depending on the type of the company, is a good idea in some circumstances, in other circumstances, you don't need to raise more than a certain amount, and there is benefit in holding off from doing so. So that would be some words of advice to entrepreneurs who are thinking about raising and maybe are in a lucky situation like Luke's company that are oversubscribed and could raise much more than they need to, in thinking about balancing that de-risking of the capital needs with what capital you actually need. So those would be a few thoughts.
Yeah, great, excellent points. And so in the last minute that we have, Luke, I just wanted to turn over to you, advice for the entrepreneurs out there that are listening and watching in, as someone that has such an exciting company.
So I would say, I joke because you mentioned like the level of interest that we're getting, and it's phenomenal. But I joke that we're 8 years into an overnight success. You build these relationships over a long time period. Some of the funds, interested in us at this point, we've built those relationships over 2-3 years at least, and they've been following this space very actively. The other thing is it's very important to build trust and credibility, because that's the key thing. The smart money, they've really analyzed the space they're going to invest in, and they know which are the companies with the best probability of success, and they're going to go after those deals. You may not necessarily get the highest valuation from the smart money. That's because they're the smart money. So they tend to somewhat avoid some of the hype and hyperbolic things that are out there in the market. So focus on building traction and credible metrics that prove your reliability, prove your resilience, prove your ability and depth of understanding yourself of the market. You really need to understand the space that you're in, because you should understand it far better than any investor investing in you.
Great points. So unfortunately, we're out of time. I mean, we can spend all day with these people and have this great conversation. So much information to unpack. But again, I want to thank you all so much. A lot of great kind of insights, especially kind of Luke ending on that one. Be careful with who you're taking money from. It does take time to build these relationships and that trust, and make sure to get it from smart money, such as Emily's firm, Danielle's firm, or from Plug and Play, because we all have been in the space for a while and have done a lot of research and looking to deploy capital pretty strategically. So again, thank you all so much for your time today. We really appreciate it. And let's keep investing in helping grow the space.
Thanks a lot, Matt.
Thanks, everyone.
Thanks, Matt. Thanks, everyone.
Great conversation, and thanks for summing it up, Matt. So up next, you should see now a poll on your screen that will let you be able to interact with any one of our panel members if you'd be interested in doing that. The poll is going to stay up for just a few seconds to let you click on all of the people that you'd like to interact with. But shortly after the poll, I'm then going to be handing over to a colleague from our Paris office for a really exciting announcement about some of the activities coming up.
Hello, my name is Nick Chow. I'm leading Plug and Play sustainability team for EMEA. Today, I'm excited to announce that our portfolio company, Salvera, has raised a $32 million Series A earlier this year. Salvera is a carbon credits rating platform solving a lot of the challenges with the carbon market by bringing trust, transparency, and traceability into carbon offset projects. They're really helping verify a lot of the quality of each carbon credit that large corporations might be buying. And in less than 2 years, Salvera has established themselves as market leaders. Over half of the carbon market transaction volume is either using, distributing, or accessing Salvera's data. Really, congratulations to the team. We know this is just the beginning. And for anyone who's interested in connecting with them, feel free to reach out to someone on the Plug and Play team. Thank you, everyone.
Thanks, Nick, for that, and really great traction for Salvera there. So now we're going to change gears slightly and move into our first set of startup presentations. First up, we are going to have a presentation from Nilus. Nilus has created a technology to rescue healthy food at the risk of being wasted. And what they're doing is that they distribute it at discounted prices in low-income neighborhoods. Let's hear from the team.
Hello, my name is Adi Beitler, and I'm the co-founder and CEO at Nilus. Did you know that poverty is more expensive than wealth? It should not be, but it is, at least 25% more expensive in Latin America. The reason is twofold. First, low-income people live in areas, many times known as slums, whereby logistics are more harsh. Streets aren't on Google Maps. It's dangerous many times to drive at night, and that rises logistic costs up. In addition, convenience stores in slums are most of the times informal, meaning that they don't have access to credit and only have access to limited inventory with which they need to offset their fixed costs, making it even more expensive for the end client. This is not only a gigantic problem, it's also a gigantic opportunity, valued at more than $150 billion if we add food products to basic groceries like hygiene products and over-the-counter medicine. At Nilus, we're tapping into a massively idle resource, which is the over 30% of the food products that end up wasted unnecessarily because of aesthetic defects or packaging defects, or because the products are about to expire and haven't been sold yet. We have developed a new commercial channel for the base of the pyramid based on community group buying technology, whereby we sell direct to consumer, allowing us to consolidate the orders through community leaders who place them on the client's behalf to access wholesale prices on top of the products that we rescue and avoid from being wasted. Our e-grocery and community group buying management system allows us to save our clients over 30% on their e-grocery bills. We are operating in over 450 delivery points between Buenos Aires and Mexico City, and we expect to grow exponentially in the coming 2 years. Currently, our annualized run rate is at $2 million. We have a Class A team that started at the Harvard Innovation Labs, but also has people who come from Pedidos Ya, the largest e-grocery in South America, people from McKinsey, from Uber, and the World Bank. Our investors include, of course, Plug and Play Ventures and traditional venture capital funds, as well as impact investors who see in our mission not only a moral mandate for the world, but also a unicorn that's on the way to scale exponentially. Thank you so much.
Thank you so much to the team at Nilus. And right about now, you guessed it, you'll see a poll coming up on your screen. And if you are interested in connecting with the team at Nilus, please feel free to click yes on the poll now. I'll give you a couple of seconds to do that. And moving on to our very next presentation, we have Greenback. What Greenback is doing is that they are recycling post-consumer packaging with advanced environmentally sound technologies to provide key elements for fairer circular supply chains. I'm going to hand it over to the team there for their presentation.
Hi, we're Greenback, and we are transforming the way that the world deals with plastic waste through building holistic, advanced recycling solutions. So we know that today less than 10% of plastic packaging used to protect our food and other consumable goods simply doesn't get recycled. In countries where there is effective waste collection, most plastic is either landfilled or incinerated or exported. In many parts of the world where these facilities don't exist, it is often disposed of in an uncontrolled way, often leaking into the environment and causing massive damage, fundamentally because there's no incentive to collect it. Now, the world's largest consumer packaged goods companies, the Nestle's and the Unilevers of the world, have committed to using a much higher percentage of recycled plastic in their packaging. But the problem is the supply is simply not there, especially for food grade packaging where technologies needs to be rolled out. And often there is what we call hard to recycle plastic, which doesn't get recycled. Now, the additional problem is that the recycled plastic prices often exceed the virgin plastic prices, i.e. virgin plastic being that made from fossil oil. And the whole industry is very much at risk of fraud because there is no trust over the provenance of recycled plastic. And that presents a major reputational risk for the world's largest brands. So this is the circular value chain that the world needs so that plastic used to package our food and keep it safe can become fully circular. It is a huge change, and Greenback is driven by solving this problem. We are developing and deploying key technologies that bring together three key components. So firstly, waste collection. We form partnerships with waste collectors in developing and developed countries, including waste pickers, which is the informal waste collection sector, which is such an important part of recycling in many, many countries. We create a new revenue stream for these guys by paying them to collect flexible plastics, those plastics which don't get recycled and therefore don't have any value today. And the reason that we can do this is because we're able to build plants that turn that hard to recycle plastic into oil. We do it with small scale plants, and we build them where the waste already exists, for example on landfill sites. Now this is really important because transporting waste to be processed in large centralized plants is simply not a sustainable option. Now underpinning all of this is our circularity platform. This is very much our angle. The software platform that we've built gathers data and evidence at the point where the waste is collected. This backs up the physical product with the provenance required to give the big brands the absolute confidence that the recycled plastic that they are buying can be traced right back through this chain to a source of post-consumer waste. So our first project is underpinned by a key relationship that we have with Nestle in Mexico, where we've signed an agreement to fund the build of our first plant and Nestle will be paying per ton of waste collected at that plant over a number of years. And this is a snapshot of the plant in Mexico and the type of waste that we will be collecting and recycling.
Thank you so much to the team at Greenback for that presentation. And I do apologize because we weren't able to fix the technical difficulties around the sound when the Greenback team was presenting. But please, if based on the presentation you were able to pick something up from their slides and would still like to connect and find out more about them, please feel free to click yes on the poll and we'll be happy to facilitate that for you. So I'll just give you a couple of seconds to indicate your interest and then we can move on. Okay, great. So now we have our next startup presentation from Empower. Empower is delivering digital plastic waste deposit systems, a solution to the plastic waste problem by giving plastic a value and incentivizing cost-efficient collection and segregation at source. So let's hand it over to the team and hear more about their work.
Hi, I'm Willem. I'm the CEO and founder of Empower. Empower is making the digital infrastructure for a circular economy. And the problem that we have is really the linear economy, where we can produce and use anything and then just throw it away. And there's no responsibility or accountability for what happens with it afterwards. And what we make then is a lot of waste, and we throw away hundreds of billions of materials worth of plastics every year. So the good thing is that there's a lot of positive developments. There's a movement to really facilitate the shifts towards circularity. And at the moment, there's more than 400 new extended producer responsibility legislations coming into place. Starting to get taxes on virgin materials. So it's really forcing all the plastic producers to use recycled materials into their new products. So even if there's a lot of good things happening, there's still an issue that the infrastructure that we have built is really based on a linear economy, because usually everyone pays to get rid of their waste. And of course, that happens then in the cheapest possible way with as little transparency as possible. And still, even if there's now a demand for the materials, it's 70% sent to incineration and landfills. And this is something that we really need to do something about. So because of this, we're also seeing a global movement now to doing something with the plastic waste problem. So we also need to really digitize this, make sure we can follow all the materials from it's been used to when it's collected, make sure it's segregated, and that it comes back to the producers as efficiently as possible. So this is really what we're doing. We're creating a digital tracking platform. So we digitize the ecosystem and the movement of all the materials, bringing the whole collection and segregation as source part of the economy into the formal value chain, so they can get their fair value for actually doing that segregation and collection, and make sure that data of where it is, what's happening, what's the best way of collecting your materials, sourcing them and getting them back into your production. How can you do that as cost efficiently as possible and as seamlessly as possible? And then you need this digital tracking platform that we have been building. We started out in 2018 with doing crowdsourced collection of plastic waste and collected around 10 tons then. Then we started building the tracking platform. So in 2019, we tracked 50 tons of materials. In 2020, we had the MVP ready, and we tracked then 500 tons of materials. In 2021, we had 13,000 tons, so growing 3,000% from 2020 to 2021 during COVID. We really see that this is working, and incentivizing that whole value chain, making sure there are flywheels that push each other really works. The platform works in the way that we digitize all the organizations and all the facilities and create digital inventory, so we can really, when something is collected of plastic waste, we digitize that collection point, and then we follow it when it's sent to the recycler and when it's made into the producer again. And we secure all these points on the blockchain, so we know that we have an immutable, auditable data point for each step, creating a chain of custody. So you will end up with having new products with a proven journey, a product passport. And I'm passing this to Carl, so he will show you how this product actually looks.
Thank you, Willem. So here we see the product passport for a unique bench with the complete details of the material origins. Here we have different data of each material type, and we can easily see the complete journey map showing the origin of each material, even with documented pictures and other verified data. So we can easily follow the different steps along the way, in this case of ocean plastics, and how it's delivered for processing, and all the way to molding and final assembly at the factory.
Yeah, thank you, Carl. And as you see here, Empower has been recognized as one of the top 5 blockchain companies in the world, facilitating the move to a circular economy, and also one of the 25 global best practice solutions to reaching the SDGs. What we want to achieve here today is really get in touch with any of you who wants to be a first mover and pioneer into circular economy, and that can benefit from our platform and create traceability and transparency. Just get in touch, and we look forward to talking to you. Thank you very much.
Thank you to the team at Empower for that presentation. And now, before I let you have a 5-minute leg stretch, we're going to hand it over to my colleague from Alberta to give you an announcement. However, just before that, we do have a poll right now. So if you'd like to connect with the guys from Empower and learn a little bit more about their traction and track record thus far, please click yes on the poll coming up. That'll stay up for a few seconds before we transition over to hear what the team at Alberta have to say.
Hi, everyone. My name is Kristen Coons. I'm a program manager here on the global sustainability team at Plug and Play. Plug and Play is so excited to announce the launch of our new office location in Alberta, Canada, in partnership with our funding partners, Alberta Innovates, Innovate Edmonton, and the Opportunity Calgary Investment Fund. Plug and Play Alberta is establishing a main office located in Calgary, as well as the satellite office up in Edmonton. We'll be offering accelerator programs focused on sustainable clean resources across the province, with our first cohort officially kicking off on March 16th. So if you'd like to learn more about our Alberta-specific programs, please feel free to visit our website and give us a shout if you have any questions.
Thank you so much, Kristen, for that announcement. Hope you enjoyed your leg stretch, checking your emails, getting your cups of coffee. Now, for another announcement, I'm going to hand it over to my colleague in South Africa to share some news with you.
I'm Bongo Santi, Sustainability Program Manager based in Johannesburg, South Africa. Africa stands to be the most detrimentally impacted by climate events, with droughts, severe weather disasters, food insecurity, and economic instability eroding development gains. The continent is facing a myriad of challenges, with countries dealing with waste pollution, finding itself being dumped in open sites, and ending up in our rivers, lakes, and the sea. Just 24% of the sub-Saharan population has access to safe drinking water, and 28% to basic sanitation facilities. And although our continent has close to 60% of the world's uncultivated arable land, agricultural production and food security have struggled to keep pace with the rapid urbanization and our doubling population. As the largest open innovation platform, Plug and Play has been bringing together the world's biggest corporations, innovative startups, and knowledge partners to tackle challenges such as this for the last 15 years. Now, we would like to invite you to join us as we launch the very first Africa Resilience Innovation Series, which will bring together the continent's most forward-thinking corporations and startups working on sustainable solutions to mitigate and improve resilience to climate impact in 4 key areas: waste, water, fashion, and agri-tech. Join our virtual launch on 30 March to learn more about these challenge areas and to explore the ARIS program. We look forward to hosting you.
We're super excited to launch the ARIS program, and do get in touch with us if you'd like to hear more about that. But because we promised you lots of announcements, here with another announcement from our team in Japan. Over to you, Taito.
Hello, everyone. My name is Taito Hasegawa. I'm in charge of sustainability initiative in Japan. I'm so excited to make this announcement today that we are going to start APW Japan program from this spring. More than 15 companies in APW Japan from a variety of industries are tackling end plastic waste, and we are so honored to support this challenge together. If you're interested in collaboration with AEPW Japan member companies, please check our website for more information and apply to the program. I'm very much looking forward to seeing you in the program and making innovation happen together. Thank you.
And now, shifting gears slightly back towards our panel discussions, please join us on the next panel with a startup Bifusion in conversation with our partners, the Tucson government.
Good afternoon or good morning, depending on where you are. My name is Heidi Kajawa, and I'm the CEO and founder of Bifusion. I'm thrilled to introduce you to the City of Tucson's council member, Steve Kozachek, who has served the city for now on his 4th term. Congratulations. And has been an incredible leader and visionary when it comes to matters of sustainability, and in particular recycling for the city. Today, we're going to talk to you about what it means for cities to build a zero waste city for the future. Steve, thank you again for taking time out of your busy day to join us for this quick conversation.
Yeah, absolutely. Happy to be here. And this is probably the #1 topic that really is affecting not just the southwestern part of the United States, where we're facing our 10th or 11th year of a drought and all the challenges that brings, but nationwide, where everybody is facing a new climate reality. When I started doing the city council work back in 2009, the conversation about climate resiliency and all the challenges that brings to a community. They were back burner. In fact, the whole notion of climate change was still, in some people's minds, a scientific debate. Now we know better. Now we know that the science prevails. Mother Nature bats last and is going to get the last word. And so we better catch up to that scientific reality that is really going to move forward and has been moving forward inexorably. The community, at least in the city of Tucson, my observation is that they are way out ahead of the public policy on all things climate. I would love to have a multiple stream collection process at the curbside. Some jurisdictions have that. City of Tucson right now has still got a single blue barrel, and you just toss your recyclables in it, and it gets separated out of our material recycle facility. Lots of labor involved in that, lots of contamination involved in that, and all the challenges that come with trying to manage a new reality that China has placed on jurisdictions when it comes to the percent of recycle contamination that they will accept. So right now, for instance, we pulled glass out of our recyclable bins because it was simply costing us money. The level of contamination in the city of Tucson right now in the blue bins, the recycle bins, is north of 25%. That's costing us money. So we have to come at this issue with an entirely new approach. We can't simply say, fill the bin up, we'll collect it, and we'll separate it out at the MRF and figure out what to do with the commodities at that point, knowing that the entire recyclable market is changing by the day. So we have to change from a recycle mentality to a reuse mentality. We as a culture, we as a community in Tucson simply create too much waste. We're filling up landfills with commodities that really need to be reused instead of simply thrown into a landfill. And the reuse is where companies such as Bifusion come in, where we have the opportunity to work with companies such as Republic Services, who runs our MRF, to figure out new creative ways to use things such as plastics. Everybody remembers the old line from The Graduate, the future is plastics, right? Well, we're in the future now. And we have a reality in the city of Tucson where, and this is probably true nationwide, where some of the plastics are a legitimate commodity for resale, and they're a revenue stream for companies such as Republic, but others are simply not. And so it's those others that we have to get our arms around and talk about what are we going to do with those instead of simply selling them at a loss or filling landfills with them. The product that Bifusion, that Heidi, you all are marketing, the blocks, the plastic blocks, are simply one example of the future that is on us right now. So I'm happy to partner with your company and with the City of Tucson Environmental Services Department. We have finally, after it feels like pushing a string uphill, but we have finally gotten the city bureaucracy to catch up with the community vision and say we are going to buy some blocks, we are going to create some pilot projects throughout the community to demonstrate that the Bifusion blocks are a marketable tool that we can use to pull some of those plastics that are not otherwise sellable in the open market at a profit by companies such as Republic, and build things in the community. Build trash enclosures, build walls, build ramadas, build the kinds of things that right now we are going to a masonry outlet, and buying these commercial concrete and mason blocks that are not doing the environment any good, but the plastic blocks will. So we're finally at the point where we're building these pilot projects. My goal, my hope is that we advance this through the city bureaucracy and buy a blocker, buy the machine from Bifusion, and start using that machine out of our material recycle facility, so that we're creating a secondary market here within the city of Tucson that companies such as Republic don't have to look at us as taking money out of the revenue stream, but instead using the commodity that they're not able to sell in the open market right now in a productive way by buying the blocker and by creating these blocks here locally. One of the challenges that all jurisdictions face is, frankly, the upfront capital costs of purchasing a blocker and getting it on site and getting it into our whole recycle reuse mentality. They're not cheap. Most jurisdictions, in the city of Tucson is no different, are coming through COVID and seeing some of our revenue stream challenged right now. And so to the extent that we can get venture capitalists to step up to the plate and help us finance the upfront capital and bring this partnership with companies such as Bifusion into a reality in our local jurisdiction, we all win. We win from a financial standpoint, we win from an environmental standpoint, we win from the standpoint of being able to demonstrate to our communities, our constituents, and the residents who are watching us as the government to do something more rapidly than at the pace of government, but to do it at the pace of the vision of the community that we live in. I can guarantee you right now that the city, that I get emails and calls from constituents all the time asking me, what's the progress on the blockers? What's the progress on the plastics? We're doing something similar with having pulled glass out of our recycles, and we're reusing glass by crushing the glass and turning it into silica sand, and so we're mixing it with concrete to do concrete work right now. So we're not going out to a quarry and buying the sand from a quarry. We want to do the same thing with plastics. We want to be using these plastics in a reuse situation that the community benefits from. And so I'm really pleased with the relationship that we've got with Bifusion, and I'm just looking forward to seeing this relationship evolve over time into one where we have them at our material recycle facility taking the plastics that Republic can't use right now and putting them to productive use. We have a landfill right now that we have just, consistent with our climate action plan, dubbed a sustainability campus. We are hoping right now that the plastics is part of the sustainability campus. We also are looking to get the glass out there. Another product that we're trying to encourage out at the sustainability campus, the landfill, is renewable natural gas. Instead of flaring off the methane, let's capture and clean that methane. We can capture and clean that methane and use it to power the blocker machine. Now this is all contained. Now this is all sort of the self-contained, environmentally conscious approach to reuse of products that otherwise are simply going into landfills. Capture the methane, clean it, use it as a fuel the blocker machine, pull those unmarketable plastics out of the MRF, create blocks, take them out into the community and build product with them. So that's the long-term goal. And I appreciate the opportunity to share with you, Heidi, and with the people who are viewing this, and encouraging them to step up to the plate, partner with us in our partnership with Bifusion, so that we can pull this vision into a reality and actually start doing this stuff in communities, not just in Tucson, but Tucson first, and then all over the country.
Thank you so much for that. I'm very excited about the partnership too. I'm thrilled that we're working on your order right now, and I'm anxious to get blocks into the market. I'm thrilled with being able to work with various departments within the city as well. I mean, it has been long. We're educating them as well. I think the enthusiasm within the different departments is starting to gain some momentum as well. So more to come on that. We'll keep everybody here posted on our progress, and of course share parts of the journey towards a zero waste in Tucson, zero waste city Tucson, as we continue to move forward. But thank you again for your time, Steve. I really appreciate it. And
absolutely.
In a few weeks with some blocks.
That's great. Looking forward to it. I've got the only one in the city of Tucson right now here in my office, and I show it off proudly. And people are just wowed every time they come in and say, that's very cool. How can we be a part of that? Look, there's a new climate reality. Mother Nature's moving forward, and we got to keep pace. And this is just a part of that solution.
Yeah, I'm really excited that I know you've been out into the community talking about this, and I'm glad to hear you're getting positive feedback from residents. And like I said, looking forward to making your vision a reality as much as we can. So thank you again.
Absolutely.
Take care. Thank you,
All
and
right.
wonderful day.
All right, you two take care.
Okay, bye-bye.
That is definitely a partnership to watch in the zero waste space. And you know the drill by now. If you'd like to connect to any one of our panel members, Steve or Heidi, please indicate so on the poll, and we'd love to make an introduction on your behalf. But now I'd like to turn it over to my colleague from Silicon Valley, Danae, for a really great announcement on our venture side. Over to you, Danae.
Hi, my name is Danae. I'm a Senior Ventures Associate at Plug and Play. We're very happy to have participated in Ruby's first $4.5 million seed round alongside Talus Capital and Necessary Ventures. Ruby Laboratories turns carbon emissions into sustainable cellulosic textiles. Their patent-pending enzymatic technology sequesters carbon and produces carbon, water, and land-neutral textiles for apparel. We're excited to work with Mika and Leila Mashouf, two very strong founders ready to impact the fashion industry. Thank you.
Thank you for that, Danae. Really exciting announcement on the Ruby side. But now going back again to probably what is our most exciting part of this event, we are going to transition into our next set of startup presentations focusing on carbon neutrality startups. We're going to start off with Connect Earth. Connect Earth is an API toolkit that can be used to calculate the carbon footprint of any purchase. But let you hear from them exactly what it is they do. Over to you guys.
Hey, my name is Alex. I'm the founder at Connect Earth. Thank you so much for listening to my presentation today. I'll speak a bit more about who we are at Connect Earth and what we're building, and also some recent developments. So we have 8 years left to cut global emissions by 55% as the Paris Agreement states, which was signed in 2015. And essentially, this means that banks failing to address the climate crisis will lose customers. So 7 out of 10 consumers actually want their bank to show them an overview of their carbon footprint, as per a report by Deloitte. And 71% of customers are actually more likely to choose a bank with a positive environmental impact, which the same report outlined as well. And 68% of millennials are actually more willing to buy a product with a social or environmental benefit. Now, what that means is that all these banks are trying to essentially, especially mid-tier banks who are basically trying to keep up with the disruption of neobanks, and obviously larger banks as well that are trying to essentially constantly innovate themselves, are really trying to capture an audience which cares about the environment and also retain their customers as well as acquire new, younger customers. And what we do is we basically power this movement by offering solutions that power green banking and fintech. So we've built an API solution that calculates the carbon footprint of a certain transaction. So we collect data on thousands of companies and products, and we standardize it according to the Greenhouse Gas Protocol. And basically what we do is our API can feed directly into a banking application, like on the right-hand side, like Cogni. We use the transaction data by the users, and we enrich that data directly with carbon footprint estimates. And we can really engage users through the sustainability by launching various features like rewards or cashbacks or gamification systems. And we can do that because we have a whole new level of data accuracy. We solely focus on collecting data on actual companies and their carbon footprint to actually be able to show the consumers and companies, depending on whether the bank is B2B or B2C, what the individual carbon footprint of the companies is that they buy at. So we also empower consumers to actually choose or understand how they can adjust their spending habits. And really, we work with a range of customers. Our biggest one is Raiffeisen Bank, who we're currently POCing with. And we also work with other providers like Cavalia, which is an e-invoicing company, with neobanks like Cogni, and also with MoneyHub, which is an open banking provider, amongst many others. So we have very, very different use cases currently, but our core product really is transaction-based. And we even have companies that are climate techs using us. Just some examples of what we can do. So we can show CO2 tracking charts. We have a whole API which does it already. Basically integrate the API, and the banks can directly show the charts to their users. We can break down the carbon footprint by merchants, because obviously we have the data on the merchants, and we can actually use emissions factors, which are basically ratios for those merchants that are multiplied times the spending amounts to show the footprint of buying at a merchant. And we can look at individual transaction details. And generally speaking, banks can be super flexible in the way they engage users. By banks, I obviously don't just mean banks, but also neobanks, but also fintechs, for example. And they can cross-sell customers, for example, into ESG solutions. They can educate them, as you can see on the right, to basically drive better sustainable habits. And they can even offer it as a premium product to actually give customers the chance to, buy, for example, a greener product. Now, in terms of what we focus on three main things: user engagement to optimize emissions reduction, and also essentially increase the engagement of whoever is exposed to our app. The data, we want to use merchant level data where possible, and we're completely API first. About us, my background is mainly in fintech. I went to Cambridge and Warwick University, and I partnered with Nick last year, who has his background in climate tech, working for Amazon on the Climate Pledges team, and going to the likes of UC San Diego and the University of Edinburgh. And essentially together we're a great team to build this with my fintech background and his climate tech background. Thanks so much for listening, and looking forward to hearing any questions. Please feel free to reach out to my email or to my number. Thank you.
Thank you so much for that, Alex. And to the audience, as you know by now, we're going to be launching a poll that you should see on your screens already. So if you'd like to connect with the team, learn more about what they're doing and potentially partner with them, please feel free to indicate so on the poll that you see before you. Great. So now we're going to be moving on to our next startup, and they're called CARBN. CARBN is a gamified app that simplifies climate action by promoting a specific set of green habits. Let's learn more from the team about what those are.
Hi, I'm Nima, and I wanted to talk about CARBN. CARBN is a gamified app which simplifies individual climate action by nudging green habits. It's the highest rated climate-related app on the App Store. If you take a step back, we'll see that ambitious net zero targets have been set globally, but achieving them requires broad individual action. New technology will only have an impact if there's first early adopters and then later broad adoption. Government policy requires public buy-in, and corporate action requires a cultural change across all levels of organizations. The good news is that awareness has been raised of the issue, and a vast majority of people now want to take action and want to see a sort of broad action. The issues they face are the inherent difficulty in changing habits, the difficulty in understanding the impact of different measures, finding it demoralizing to change when others don't, and being overwhelmed by the number of changes. So we built CARBN with that in mind. And we very much use nudge theory that we've learned and used in sort of other walks of life, in sort of commercial consulting, in other sort of software that we've built, and we're using the sort of nudge theory and the sort of those features and those actions to promote climate action in our app. And the results are speaking for themselves. We have 7% weekly growth in our daily active users for the last 6 months. Our users range from professionals with families to climate advocates, and actually 2/3 of our users are actually based in the US, which is our core target market. On the business side of things, our business develops through an ecosystem of partnerships. So on the one hand, we have sort of super users, schools/universities, and green brands, which basically use us as a tool to engage with and mobilize their network to take climate action. So that can be great for brand building for green brands, but it can also be a sort of tool for engagement with students or friends. And obviously that brings us a lot of new users and engagement. In terms of corporates, we've built something called the Climate Action Challenge, which sits across our app. It's a sort of B2B layer. And that's a sort of gamified challenge across the company where companies encourage and engage with their staff on sustainability, and staff compete and earn rewards for sort of changing habits and having green habits. We've piloted this, but I'll give you a bit more detail in a minute. In terms of green products, for example, clothing platforms, secondhand clothing platforms, or renewable energy providers, we've integrated and their propositions within our app and are looking for more partners to give people products and services to help them lower their emissions throughout their climate action journey. So in terms of some examples, we've run the Climate Action Challenge with Simon Kucher and Partners, which is an international consultancy. We did this in their London office, but they now want to roll it out globally. The results were fantastic, and there was a real shift of culture. We also have a lot of other companies on the waiting list. They're just waiting for our Android app, which will be available in 1 to 2 months. In terms of products, we're working with Arcadia Power and offering their renewable energy tariffs to all of our US users. It's also important to say we work with leading experts and adhere to the highest standards. We're a B Corp and we're part of the UK Tech Zero initiative. Thank you, and reach out to us for any questions.
Thank you so much to the team at Carbon for putting that presentation together and sharing with us what it is they do. So please do feel free to click yes on the poll if you'd like to connect with the team from Carbon. But now, as usual, we're going to move on to our next startup, and they are called Manifest Climate. What Manifest Climate does is that they uncover the insights that are needed to respond to climate pressure and find climate confidence. Let's hear it in their words, what exactly it is they're up to. Over to you guys.
Manifest Climate is web-based software that provides a fast, flexible, and affordable way for organizations to master climate-related risks and opportunities. Market Intelligence provides expert insights on the climate trends that matter to business, and it also makes it easy to stay on top of how industry leaders are responding to the climate challenge. Climate Maturity Profile leverages our core climate expertise and cutting-edge AI to help organizations understand how they measure up faster and more cost-effectively than alternatives. And our Learning and Resource Hub provides an efficient, flexible, and affordable way to reach all employees who require climate training and education. We act for some of the biggest players in the game, and we know what good looks like. Contact us today to explore how you can accelerate your climate ambitions.
Short, sweet, and to the point. If you would like to connect to Manifest Climate, you know what to do right about now? Yes, click yes on the poll and we'll make that introduction for you. Now, we're going to move on to our final startup in the presentations, and they are our penultimate startup rather in the presentations, and they are Minimum. Minimum is a platform that allows businesses to understand their carbon impact and become carbon neutral by connecting them to market-leading carbon projects. Over to the team at Minimum.
Hi there. My name is Chris Winchurch, and I'm acting CEO and co-founder of Minimum. Minimum is a software platform that makes it easy for businesses to understand their carbon footprint. We also help businesses identify reduction opportunities, set and track their progress toward net zero goals, and report to all stakeholders. To give you a sense of how the Minimum platform works, let me start with data collection and calculation. So for all businesses, we try and make this as quick and easy as possible, whether that's by submitting data through our online tooling, as you can see in the demo here, or uploading the data that you already have, whether that's general ledger or utility bills and so on. We use all of that information and feed it into our world-class calculations engine. What this basically means is that we automatically calculate your carbon footprint according to the Greenhouse Gas Protocol to allow you to get visibility on your carbon footprint in days rather than weeks. For enterprises and asset managers, we allow you access to advanced Scope 3 calculation capabilities. So whether that's refining the estimation of each of your suppliers through supplementary information, or our speciality, reaching out directly to those suppliers, and we will work with them on your behalf to understand their carbon footprint and start to feed that information into your carbon footprint so that you can start to make better decisions about the purchases that you're making from suppliers or the investments that you're making, and understanding holistically your carbon footprint while digging into the wider parts of the value chain, which traditionally have been much harder for a business to access. Of course, monitoring and understanding comes next. We give you really powerful ways to view the data that's coming out of your carbon footprint estimation, whether that's looking at the absolute amount of carbon that's coming out of different areas of your business, different parts of the value chain, or whether it's looking at these all-important carbon intensity metrics, which would be the amount of kilograms of CO2 generated per unit of economic activity, for example, per dollar of revenue.
This becomes especially important in the asset manager and enterprise use case, because if you're comparing suppliers of different sizes or investments that are at different parts of the life cycle of growth, it's not always the most useful thing just to compare the absolute amount of emissions. What you really want to do is make a like-for-like comparison according to those intensity metrics, so that you can understand and compare across companies of different sizes and stages as well. So we give you access to all of that rich information through our portal. At any time you can come on and understand those data, and you can speak to our experts as well if you need help in interpreting any of those and need advice on how to move forward with your sustainability goals. We also allow you to generate reports automatically according to all of the common reporting standards, whether that's the Greenhouse Gas Protocol, CDP, SASB, TCFD, SECR, and so on. We can also, of course, generate bespoke reports according to any of your needs. So, for example, if you want something for your annual report or you want to inform employees on your progress, we can facilitate all of that as well. When it comes to net zero planning, we help customers identify reduction pathways to align your organization with science-based targets. And we can help you find and track your progress against reduction initiatives that can be used as part of a net zero goal as well. Now, when it comes to net zero, often customers are interested in using carbon removal and reduction projects as well as part of that. Minimum has a world-class portfolio of projects available to our customers, and so you can be sure that you're getting the highest quality offsets that are available on the market. You can also access our portfolio, which is aligned with the Oxford Principles for Net Zero Aligned Offsetting, to make sure that all of the offsets you're paying for are completely aligned with your net zero goals. So the main benefit of Minimum is that it's easy to get started. It's a seamless way to organize your carbon management forever, rather than having a series of discrete exercises. You always have access to the platform, and you don't lose the ability to interact with our experts as well. You always have that human touch to make sure that you're reassured with what's going on and that you're having the best-in-class expertise as you navigate the sustainability challenge. Thank you very much for listening. Please visit minimum.eco for more information, or reach out to me directly at chris@minimum.eco. Thank you.
Thank you so much to the team at Minimum for that really insightful presentation. But that does indeed actually bring us to the end of our startup presentations. But before we move into our next fireside chat, I'd like to introduce my colleague Catherine from the Silicon Valley team for another exciting announcement. Over to you, Catherine.
Hi, everyone. My name is Catherine Moldow, and I am a ventures analyst in sustainability at Plug and Play. We are thrilled to announce our recent investment in Bloom Bio, a startup eliminating persistent contaminants from environments. The team at Bloom Bio is achieving this through the deployment of bio-based technologies developed in an enzyme platform that can rapidly clean a variety of heavy industry pollutants in soils, air, and water. Bloom Bio is well positioned to scale, and we're excited to have participated in their $2 million seed round, alongside Day One Ventures, Liquid 2 Ventures, and a variety of others. We look forward to supporting the Bloom Bio team in their journey.
Fantastic. Thank you so much, Catherine. And now for the final element of our event today, please help me welcome to the stage a chat between our startup, Oceanworks, and a corporate partner of ours, BASF. Let's find out more about what their partnership and impact is about.
Thank you both so much for joining us today. I'm very excited for this fireside chat between Vanessa Coleman from Oceanworks and Neil Okartar from BASF. I hope I'm saying that right. Please correct me if I'm wrong on that one. But we'll just, perfect. So we'd love to just start off by having you both introduce yourselves, a little bit about your company, and then your roles in your respective organizations. So Vanessa.
So hi, everyone. Happy to be here. I'm Vanessa Coleman, CEO of Oceanworks. Oceanworks is a sustainable plastic sourcing platform. Basically, we focus on consistent quality, reliability, supply, and transparency. So all the things large brands need to transition into material sources that they typically wouldn't think about, like ocean-bound, and even some hard to access post-consumer recycled material streams. So we've been working in this space for a number of years now, scaling up our programs, and recently partnered with BASF. So Neil can take it away.
Yeah, hi, my name is Neil Okartar. I'm an investment manager with BASF Venture Capital. BASF Venture Capital is the venture arm of BASF, one of the world's leading chemical companies, headquartered in Ludwigshafen, Germany, with a North American headquarters in Florham Park, New Jersey.
Great. So I would love to learn a little bit more about how the two of you met and started working together, and what that entails now.
So for Oceanworks, Plug and Play actually played a kind of key role in connecting us with BASF. We participated in the Alliance to End Plastic Waste Plug and Play Accelerator program a couple of years back. And for us, that was a really attractive program in that it was oriented towards connecting startups with brands working in and around plastic waste in the circular economy. So that's exactly where we play. And we have had some intersections with BASF over time. They've been a leader in the traceability space, and been doing a number of different pilot projects around tracers, different elements that Oceanworks has followed closely. And so as we built out this platform and strengthened our capabilities on the traceability front, we have continued the dialogue and eventually got connected with the venture team at BASF.
Yeah, and for me, it all started at Boston Logan International Airport. That was the first time I met Vanessa and her team. We spoke on the phone just to go over the pitch deck that Oceanworks had, and for me, it was clear straight away that Oceanworks was onto something. And so we kept the conversation going, and as they say, the rest is history.
Very cool. So note to all the investors out there, hang out at airports because you never know what will happen. So we'd love to turn it over to you, Neil. Is I'm sure BASF, it's a household name, people know it, they're very familiar with it. I'm sure you're getting bombarded with a lot of different startups trying to work with you or get investments from you. So, what kind of separated out Oceanworks from the rest of the pack? What kind of caught your attention and said, we need to invest in this company, especially in an airport? So, yeah.
That's right. I mean, the thing that was clear for me was that Oceanworks is meeting the brand's needs. So brands have this need to be able to track and trace their recycled plastic from the point of collection all the way to consumer. So a lot of companies perhaps promise this ability to track and trace, but Oceanworks actually showed it and delivered on the ability to do so. And so because Oceanworks is able to meet the brand's needs, for me, that was one of the main things that caught my attention and why we decided ultimately to invest.
Very cool. I mean, that's exciting to hear. And, Vanessa, I think you guys have been working in the space for a few years now. And I think actually been a little bit ahead of the curve when it comes to doing this type of work. So would love to hear, a little bit more about what was the vision behind Oceanworks and, what has the journey been for you over the last few years with brands saying, oh, we're not sure if we need this, to now saying, yes, we need this type of solution. So, yeah.
Yeah, it really has been an evolution, and certainly the arc of our business has been very brand focused, as Neil highlighted. We took a customer first approach to financing in some ways, and that we haven't raised much capital over the course of Oceanworks. This is actually our first significant funding round. And have worked very closely with brands at different scales, trying to understand basically their limitations to sourcing all this plastic waste that's everywhere. So, everyone sees the pictures, everyone knows there's tons of plastic waste in the environment. Why isn't it in products? Because it could be. And what we've come across is that really there's a number of factors. First, material quality that has to be demonstrated and tested by the brands, then reliability and consistency. And that, I think, is the biggest barrier. We still encounter tons of brands that are very excited about the opportunity, but they can't get it in their head that ocean-bound recycled content is something that can be sourced consistently at scale. And it is today. And I think that's a place where Oceanworks really excels. And then as you look to bring that into a program at scale, that's where we've really invested on the traceability front. Because if a big brand is making claims around the recycled content in their products, they need to be able to back those up. And so we've invested in a blockchain-based kind of digitized track and trace solution that traces every order from shore to shelf is the aspiration. So, we're still plugging in a lot of nodes as we go through the process, but that's one of the areas that we're really excited to partner with BASF around, because they are both they are growing and expanding their work in the sustainable materials and recycled content side, and also they care deeply about the traceability. So we're looking for opportunities to offer these types of traceable recycled plastics at scale through BASF partnership, and also ways that we can embed the traceability technology into the work that they're already doing around carbon and plastic footprints. And so for us, it's a great alignment, and that we see them as a leader in the space.
And that's fantastic to hear. And so, I know your partnership right now is just on the investment side. We'd love to hear, and Neil, I'll maybe turn it over to you first, your dream impact, or what you can see for the future of this partnership together, and ultimately what can it accomplish?
Sure. I mean, again, another reason why BASF Venture Capital invested is because sky's really the limit for what Oceanworks can provide. And so, yes, we'd like to see more folks buying recycled plastic through the Oceanworks platform. And it's that confidence in the ability to track and trace that's going to drive more market participation. And so that's really what we'd like to see. We'd like to see Oceanworks hit its potential in terms of serving as that marketplace to consumers. Beyond that, I think both Vanessa and team and BASF Venture Capital will be opportunistic. Where else can we use this technology that Oceanworks has? And so, yeah, we'll just continue to partner together and see where it goes.
Yeah, and I think that's a great point. One of the things that's always challenging for a smaller startup is to get a view of the realities at scale. And so, I think there are a lot of opportunistic places where we can take what we've built and align it with, some of the needs that BASF sees as it goes about, continue to expand its business and drive towards more circular solutions, which is certainly one of their priorities.
Great. So I know we're almost out of time. We'd just love to pass it back to you both for just a quick minute or so. What are the key takeaways that you think the audience, listening at home or in their offices, should get from this, partnership together? I mean, one large organization, one small startup coming together to solve a pretty large problem. What are some of the key takeaways that they should take from us?
Yeah, I'd say for the startups that are out there, the main thing that attracted me, BASF Venture Capital, to Oceanworks was the fact that Oceanworks really had its finger on the pulse of the brands. And so it's one thing to have a technology, it's another thing to understand what your customers are asking for. And so that's one of the things that we're looking at when we invest, is to say, okay, does this company, does this startup really have its finger on the pulse of the customers? And that's something that Oceanworks was able to demonstrate, which is why they've got the commercial traction that they already have, and which is also why we invested.
Yeah, and I think for our side, even though this is a relatively new partnership, we have been tracking for some time the work that BASF was doing in the space, and I think that positioned us well to understand what they were looking for and see that there was a potential for alignment. And from there, for me, I think as we've done on the brand side, just a lot of listening, understanding their goals, trying to figure out what the best ways are to collaborate and leverage the particular strengths of each party into something that can be kind of bigger than the pieces, and keeping a really consistent communication, in all strategic partnerships, I think is important. And so it's something that I, aspire to do here as we grow the program. And, I think Neil had touched on looking for opportunistic ways to collaborate. And I think that's one of the biggest opportunities for Oceanworks in this. And in order to see those opportunities, you need to be really consistently communicating, staying in touch, just making sure you have a common understanding of what the possibilities are and what the capabilities are of each party, so you can find those diamonds in the rough. So anyway, we're very excited to have this opportunity to work together, and yeah, I'm looking forward to bringing these traceable materials to the broader market in partnership with BASF.
Yeah, fantastic. Well, thank you both so much for joining us today. We really appreciate it. A lot of interesting learnings, and kinds of can show you never know where there's going to be a great opportunity. Didn't know that it actually occurred in the Boston airport, so we'll send them a thank you note. But thank you again so much for your time today, and yeah, we really appreciate it.
All right, thanks, Matt. Thanks, Vanessa.
Thank you.
Really great fireside chat. And if you'd like to connect with any one of our panel members from Oceanworks or from BASF, please do so by indicating on the poll, and we'll make that introduction on your behalf. And now for our final exciting announcement of our event, I'm going to hand over to one of my colleagues from the EMEA region to share some news with you.
Hi, everyone. My name is Clotilde Benero, and I'm a Sustainability Ventures Associate as part of our European team based in Paris. And today I'm thrilled to announce that we've invested in Connect Earth's pre-seed round.
Thank you so much for sharing that announcement, Chloe. And with that, we are actually and sadly at the end of our event today. Thank you so much for joining us. We hope that you enjoyed finding out more about what we're doing and what we're looking forward to do as Plug and Play. And we hope that we will be helping you make some connections from the different polls that we put up earlier. And now we'd also like to ask you a favor before finally closing off, to please respond to our poll right now. That will help us improve events for you in the future. And if you'd like to connect with us at Plug and Play as well, please do check the chat. I put my email address in there, and feel free to follow us on any of our social media pages. And we look forward to chatting with you. And yeah, thanks for being part of our event today. We really appreciate it and look forward to seeing you in the rest of the year. Cheers. Goodbye.